On the index, we had Mahindra, Bajaj Finance, SBI Life, and then some of the heavies like Hindustan Unilever, HDFC, and ITC, which did quite well. On the losing side, ICICI Bank, which has been otherwise a strong stock, was down today. Tata Steel and Tata Motors. In the F&O space, the top two gainers were cement stocks, India Cement and Ambuja. Big moves in both these names. Escorts was the other one, which did well. And on the losing side, we had Canpin Homes as the top loser, followed by Delta Corp and GNFC.
So the Indian markets there bucking the global trend. And on the back of that, in fact, some bullish opinion coming in on the market. Ramdev Agrawal, chairman and co-founder of Motilal Oswal Financial Services, says that the Indian market will constitute 5% of the global market capitalization over the next decade. He also remains optimistic that foreign institutional investors will soon realize that India is a unique story and that India will get its fair allocation.
See, today India is about 3.5% of the world in terms of market cap. We are about about $100 trillion global market cap. We are about 3.5%. And in next 3, 4, 5 years, we are very. I mean, the way the world is today, I think India's gain in market cap share is going to be quite rapid. So we are heading towards in next decade at least to about 5% of the global market cap. I remain positive, optimistic that maybe with a little gap, FIs will definitely stop selling. But they might, as the earnings momentum is maintained, I think they would come to buy here and build the position of their portfolio.
Well, meanwhile, oil prices soar on the back of supply concerns ahead of the EU embargo on Russian oil from December. Meanwhile, easing of COVID curves in Chengdu province of China allayed concerns surrounding demand coming from the country to a certain extent. Cryptocurrencies have seen a big fall over the last few days. Bitcoin is below $19,000 and the overall market capitalizations of all currencies is below $1 trillion. Manisha Gupta is joining us now with the key factors responsible for this downtrend. Manisha.
Well, yes, it has been a sharp decline in cryptocurrency markets. Every crypto is down by anywhere between 10 to 25% on the weaker side. And this is ahead of the US Fed meeting on 21st with expectation that we are looking at a 75 to even 100 basis points of an interest rate hike. We have seen other asset classes take cognizance of that as well, but cryptos really seem to be taking it to the chin. So when you look at the overall global crypto market capitalization, that has declined yet again to below $1 trillion to just about $909 billion as of now. But the interesting trend is that you have seen an increase in the trading volumes here. That has gone up by nearly 45% to $69 billion for the overall crypto market. Within this as well, when you look at Bitcoin, that one is trading at the lowest since 2020. We have seen it hit 17,600 on the lower side. Bitcoin actually has been on a declining spree since it hit an all-time high of $69,000 in November 2021. Not just Bitcoin, Ethereum is down by 10% as we talk right now, and that has hit a July low of $1,300 as well. For Ethereum as well, since the merger went through, the prices have been constantly declining. It's just bad timing here, and the market has not been able to go on an uptick here. But these are not the only cryptocurrencies. When you look at Solana, Cardano, XRP, all of these cryptocurrencies are down anywhere between 10 to 15% as well. And when you talk about this year, we're down by anywhere between 55 to 85% down for many of those cryptocurrencies. An year which clearly is going on to the negative side. Even as we have done 8 months of the year, there has been not one single month that you have seen gains in any of these cryptocurrencies.
Right, Manisha, thanks a lot for that. Now, there's a fresh round of layoffs at the ride-hailing app Ola. The company is likely to hand out pink slips to at least 500 employees across different software verticals of ANI Technologies. Many of these employees are believed to have been working on different aspects of the Ola app. Now, the move comes in the backdrop of declining sales of the Ola electric scooter. Parikshit Luthra now joins us with more details. Parikshit, tell us what has contributed towards this round of laying off pink slips that we're beginning to see now.
Yes, Ola has been in the process of restructuring its different businesses for at least 4 to 5 months now. The latest that we hear that at least 500 employees across different software verticals of ANI Technologies and Ola Electric are likely to be laid off. And the process of handing over pink slips has already begun. These are people who were working on the software aspects of the scooter, software aspects of the Ola app as well. The company has denied in its report, in its statement to CNBC, that 500 employees are likely to be sacked. They have said that this round of restructuring will impact 200 employees, or 10% of its 2,000-strong engineering workforce. They also go on to say that Ola wants to increase its engineering talent pool to 5,000 over the next 18 months. However, our sources are telling us that the number of those who are likely to be laid off across software and engineering teams would be around 500. Ola has also said that it is centralizing operations and is undertaking a restructuring exercise to minimize redundancy in the business. Earlier, Ola had laid off close to 2,000 employees from Ola Cars and Ola Dash. Ola Cars and Ola Dash had been closed due to restructuring. There were some employees in Ola Electric who had also been laid off. The company has seen the exit of at least 30 senior officials of the leadership team in just about 18 months or so. There also seems to be a plan to revisit the direct selling platform or the direct selling policy of Ola Electric. The company has now announced that they would be opening up 200 additional experience centers all across the country. And all this coming in the backdrop of declining sales since April. April, we saw the company selling at least 12,700 scooters. Now, this has come down in August to about 3,351. So on a month-on-month basis, the sales have been declining continuously. And what was reported in August was their lowest in about 7 months.
Right, Parikshit, thanks a lot for that update. Let's move forward now. E-commerce platform .pe has raised $58 million in its Series B round of funding led by Temasek. The funding round also saw participation from existing investors like PayU, InfoEdge Ventures and others. The company plans to use the money to expand its merchant base by 3 times in the next 2 years. Shares of tea manufacturer McLeod Russell hit upper circuit for the second straight day. The stock is rallying on a possible takeover of the company by Carbon Resources. Now, lenders of McLeod Russell have received a non-binding letter of intent from Carbon Resources to acquire controlling stake in the company. CNBC-TV18 has accessed this letter in which Carbon Resources has offered to infuse upfront equity worth 300 crore rupees and fresh debt worth 900 crore rupees to repay the debt obligations to existing lenders. Canada-based fund Ontario Teachers Pension Plan will be picking up 30% stake in Mahindra Susten, the Mahindra Group's renewable energy arm, an equity value of 2,371 crore rupees. The deal also entails the setting up of an infrastructure investment trust. The Mahindra Group and Ontario Teachers will jointly explore selling an additional 9.99% stake by the end of this fiscal year. After Adani Group completed the acquisition of Ambuja Cements, in fact, has sought shareholder approval for a 20,000 crore rupee cash infusion. In its EGM on October 8th, the cement major will seek approval for allotment of nearly 48 crore warrants at nearly 419 rupees to promoter group Harmonia Trade and Investments. The company would also seek approval for the appointment of Gautam Adani and others on the board. Speaking about the cement foray, Gautam Adani set a target of doubling the capacity in just 5 years.
We expect significant margin expansion to become the most profitable cement manufacturer in the country. And we anticipate going from the current 70 million tons capacity to 140 million tons in the next 5 years.
Well, staying with news from the group, Adani Wilmar, company behind Fortune and recently acquired Kohinoor brand, is expanding its ready-to-cook segment with rice-based products. While the company is ready to foray a launch a do-it-yourself biryani kit under the Kohinoor brand this fiscal, it is also working on Mexican rice, Thai rice and fried rice. The company told CNBC-TV18 that the focus remains on the ready-to-cook segment rather than the ready-to-eat products, adding that it would launch more localized variants of poha and similar breakfast items. The government continues to protect domestic tyre companies from cheaper imports. The Director General of Trade Remedies has recommended continuation of anti-dumping duty on import of new or unused radial tyres from China. The decision follows appeals made by MRF, Apollo Tyres and JK Tyre Industries. SoftBank-backed Oyo Hotels reviving its plans to check into the Lal Street. That's the buzzword today. It has filed an addendum to its previously submitted DRHP with SEBI. Oyo has also reported its maiden EBITDA positive quarter, and losses have also narrowed. Yash Jain is joining us now with more details. Yash, Oyo calling D Street again. What else are you picking up?
So, Ashmit, the entire delay which came about as far as Oyo's IPO is concerned, that created a fair bit of uncertainty amongst primary market investors. But certainly the news today from Oyo Hotels does bring a lot of relief. The company, that is Oyo Hotels, has filed addendum to the DRHP, which it had earlier filed with market regulator SEBI. What does this mean? It is essentially updating that filed DRHP with SEBI with additional financial information. As far as that additional financial information is concerned, the company submitted financials for Q1 FY23 along with that DRHP with market regulator SEBI. And that's not all. We've been given to understand from our sources that the company also is looking to forward to filing the Q2 FY23 numbers with market regulator SEBI, and that could happen by October this year. Now, once the Q2 numbers have been filed with SEBI, that is when market regulator SEBI will start looking at the IPO proposal. And once the process from there on goes fine, then by the fourth quarter of FY23 is when Oyo could look at launching its IPO. As far as the IPO itself is concerned, nothing else changes except for these updated financial documents. So, of course, the size of the IPO, that remains the same at about 8,430 crore rupees. Out of it, 7,000 crore rupees is the fresh issuance of equity, which means that money comes into the company at about 1,430 crore rupees is what selling shareholders would raise through selling their stake in the company. Financials, they've improved significantly post-COVID. So as far as the financials are concerned, it's the story of narrowing losses and rebound in sales. Revenue from operations, that is up 21% for FY22. Losses, they've halved to about 1,890 crore rupees. As far as the first quarter of FY23 is concerned, it is the maiden EBITDA positive quarter for the company, EBITDA positive of 7 crore, and the net loss has also come down to about 350 crore rupees.
Right, Yash, thanks a lot for all those updates coming in from the market. But moving ahead now, speaking of IPOs, German car manufacturer Volkswagen is expecting to raise over $9 billion from the initial public offering of its sports car brand Porsche. Now, the offer period is set to begin tomorrow with a planned trading start on September 29th. Volkswagen is eyeing a valuation of $75 billion in what is likely to be the largest IPO in Europe in more than a decade. Well, with that, it's time now for a very short break. But coming up on the other side, world leaders, including heads of states from US, France, Germany and others, are in London to attend the funeral of Queen Elizabeth II. Details when we come back.